down. It's time to get started. Welcome back, everybody. Hopefully, everybody had a nice holiday weekend. I know we were here on Friday, but that felt like a long time ago. So, welcome back. It's December 1st, 2025. Spoos this morning. 2 minutes to go to the cash open, are down 45 handles. The next thing you want to look at, anytime you look at the S&Ps, they're making a decent move. Doesn't matter whether it's higher, whether it's lower. It's really weird. A little delayed today. It's a little strange. Doesn't matter whether it's higher or lower. You're looking at contract size next, and you want to see if the contract size is really, developing. And right now, it's decent, 228,000 contracts. So there's no question that this is not like holiday trade per se. So 228,000 contracts going off this morning, which is some decent volume. Now, the next thing I am going to look at up here is going to the bond market, because the bond market, it's been asleep lately. I mean, literally, I just haven't seen a lot of price action outside of the bond market. And today, look at the volume inside of the bond market. The roll is pretty much over. It's done with. So the bond market is doing almost as much volume as the S&Ps are doing, which is staggeringly large. It's just confirmation on the screen right now that what in fact you're seeing. Okay, there's some real moves. There's some big boy moves actually going on in this marketplace. This is real capital, if you will, that is moving and that is underway. And I think that right off the bat, take the day seriously, because the expected move for the entire week, again, the expected move for the entire week is $100. Here we are. You haven't even heard the bell go off yet, have you? I have not. And yet, sorry, I'm fixing stuff over here. And yet, you haven't heard the bell go off, and we've already moved half the expected move for the entire week. So going to get a little wild in here. Amazon is green. Everything else is in the red in terms of tech. Let's come this morning. So at the bell this morning, looky here. That, people, is almost a fully correlated state. Okay. If there's one interesting sign right out of the gate, I got to tell you, I didn't see that in the pre-market. There were still some bids. I mean, specifically, one of the bids was under energy. I didn't see this coming out of the gate. Out of the gate this morning, you're almost fully correlated to the downside. Let's then go look over at ticks. Why am I looking at ticks? Interesting. Okay, negative 1,000 tick. Now, this doesn't proclaim that we're going down. It doesn't proclaim that we're going up either. Okay, we're just moving. The marketplace is moving, okay, as a unit, meaning that arbitrage is actually gripping hold. And if the market does move higher or moves lower, okay, you are going to see it move, okay, as much more of a unit, given the fact that the correlation is incredibly high here. So again, some interesting aspects right off the bat to look at. And again, today is brought to you by technology. Couldn't happen to a better sector, but it's pretty much tech taking a hit across the board. But the only real standout in early trade, okay, would be probably right here in Broadcom. But Broadcom hasn't had any sell side activity. Meanwhile, NVIDIA can't catch a bid to save its life. Now, this thing's in trouble. I mean, not too often we say that. NVIDIA, there's trouble. Okay, the marketplace has got no love from 212 directly to 170.74. Remember, I keep asking everybody the question: would you buy it at 140 right now? Yeah, let's say it just goes down to 140 over the next couple of days, and everybody's going to be like, "No, I don't really want to buy it. I did, but I don't now." Yeah, that happens every time. So, all right, let's let this thing kind of open up a little bit, get some order flow going. Speaking of order flow, it's piling in right now into NVIDIA in the first couple seconds trade. This is probably worth looking at under option statistics immediately. There's nothing going on. There's some call selling. Some people were buying calls. Now they're selling them, probably for a significant loss. There's no put buying going on, so the order flow is not decisively negative. As I said a moment ago, you actually have Amazon that was slightly higher this morning. Obviously, this is going to be it's Cyber Monday. Ladies and gentlemen, welcome to Cyber Monday, where you can buy crap from Amazon. That's all they offer, by the way, anymore. They don't offer real products. They just offer crap. I mean, like literally, I go on there and the brands on there are just weird. There's like, you know, there's words with no vowels in them, and that's the name of a product. I would like some ZZY. Okay, you're like, what the hell is that? That's the name of the company. So clearly, some people in China are probably just having AI produce the entire product. They're not even involved anymore. And AI is getting a little froggy with it. And they just develop products called, crap. That's really what it is. Um, all right. Let's yeah, we're gonna, by the way, I'm aware of that hood is getting hammered because, obviously we've got a position in there, but it's not getting hammered enough. Not enough, not yet anyway, but we'll see how that one actually plays. So with the S&P is down some 39. Look, I'm not all that excited, enthused right now about it because I'm not at all surprised. The marketplace, and this was I guess the crux of the entire weekend video. For those of you that actually watched, did you watch the weekend video? Did you? Because there was some important stuff. I try to cover some important stuff in there, and the bottom line with the weekend update. Okay, and I'll just recap for a moment in here. The weekend update, okay, was about the volatility and what I call like the volatility fuse. It was already ignited, like it's going to happen whether you like it or not. Um, the rally that we saw, and I actually heard Garrett pick up on that exact same thing. The rally that we saw, okay, is unequivocally, okay, one of the most vicious rallies that we've actually seen, okay, in any recent history. You got to start going back, like 15 years to see moves that violent to the upside. You with me over here, especially during Thanksgiving weekend? So you got to go back years to see moves that are this harsh and this violent to the upside. And if there's one thing, okay, that I will constantly hammer into people, okay, after sell side activity is present, let's talk about sell side activity. All right, there's some sell side activity. After that's present, okay, the most vicious move you should see, okay, is going to be to the upside. And there's no question. This one took us all the way back to almost all-time highs, okay? But that pretty much embodies volatility. And people, they don't understand volatility because they're like, no, the volatility went back down. Of course it went back down because the market sprung back up, okay? But that's not the detailed measure of risk, okay? This is just like taking the temperature right now. Like VIX is taking the temperature right now. And this is the stuff that was not explained in the weekend update. The VIX takes a temperature, okay? Puts the finger outside. How is it out there? And you're like, it's freaking cold, man. It's cold, okay? So, all right, that's it. It takes the temperature right now. But it's not. The VIX is a piss poor forecasting tool. It can't see anything. It's like literally like 2 seconds in front of it because the VIX, okay, is completely subject to whatever the SPX is going to do. It's it's the SPX. It is the SPX. The VIX is calculation off the SPX options, right? And there's no underlying to the SPX, so it is what it is. So I start looking at things, outside of that, and I start looking at things like, the volatility futures, which you're like, no, but those got crushed. All you had to do was just look one more step out to the 51-day, the Jan volatility futures, and recognize the distance between this little monkey and this little monkey, okay, is freaking huge. There's a 1.5 difference over there, which it just proclaims, okay, and by the way, I want to make this very clear. This doesn't say we're bullish or bearish. It doesn't say that. Everybody wants to construe that he's saying I'm bearish, okay? It's not about bullish or bearish. It's about that the marketplace is unsettled. If it was settled, the vol would crush back here in Jan. And of course, you're going to give me 50 different reasons the vol is not going to crush. And one of them, of course, is going to be the Fed. What is wrong with you? The Fed happens inside of the next 16 days. So even the Fed is not the risk, okay? It sees other risks out to Jan. Okay. What is wrong with you? I ask that a lot to my children. Like, what's wrong with you? And of course, they've gotten smarter, the kids, that is, and they go, it's your genetics. You go, I understand that. So in this like, this trading environment, there's clarity to that there's still going to be risk, okay, in the near future. The next 16 days doesn't look crazy, okay? But you go out 51 days and they're like, oh man, we're not okay. We're not okay. If we were okay, these would not be 20, 21, okay, 2140. These are big boy numbers. And they're as far as the eye can see. And you can probably make an argument, yeah, it's the administration. I would agree with that. They're a volatile administration, okay? And that's not political, that's just reality. They're volatile and probably keeps volatility up to some extent. You're like, yeah, I don't know what's coming next. Whatever. I don't give a damn, okay? But I am telling you that that fuse was lit and it just doesn't go out. Like when you see big volatility in a marketplace, and I will always remind people, okay, it doesn't just go off quietly into the night, and it's never going to do that. Especially, remember, the more violent the rally, okay, you are in it, and people like, yes, there's definitely dip buyers in here. I'm not negating that, okay? Like, I'm not going to sit here and say that there's no dip buyers in here. Of course, retail loves to hop on board. Okay, they love to hop on board. And I keep saying to people that, you'll only look in hindsight and they're like, oh, that was a really stupid move I made. I felt like I got just roped right back into the marketplace. You did. Okay. And you're going to be, because this is the kind of trade. And I say this, let's just back up just a little bit. Okay. You can probably put a finger on the actual day that the vol really started to pick up, and it's probably about October 10th. But since October 10th, okay, and that would have been the bottom too, since October 10th, you're in a pretty violent volatility channel here, volatility box, if you will. And it's actually a very wide one too. This is over 400 points of range, which is considerably bigger than some of the vol boxes excuse me, that we've been in the past. But October, November, now, obviously into December, we're no longer propagating like new highs. The last new high was back here. That's fine. You missed it there. You missed it here. It's fine. Okay. But you have to understand that you're going to cycle up and cycle down. The problem is going to come where, and I'm not even debating this. I haven't succumbed to the idea we could hit all-time highs again before descending back down, and all-time highs again before descending back down. Okay. I promise you one thing. This marketplace will not go quietly into the night, and it will rope as many people as it possibly can in. And that dynamic, and I always say this, that dynamic sounds so diabolical because it is, but that's the dynamic. That's how traders think. Like I keep going back, and I'm going to say this 100 times. Okay, I keep going back to the same damn example. How many people would buy NVIDIA at 140? I will say that crap until NVIDIA hits 140. And all of you keep coming out. You're like, I would buy it at 140. I wanted it at 140. You wanted it at 140 when we were at 200. You wanted it at 140 when we were at 190. You wanted it at 140 when we were at 180. But I promise you one thing. You will not want it when it comes to 140. And I want you to keep remembering that one. Okay, because somebody in here will buy it. They'll buy it at 140. And then you'd be like, I should have waited till it was down at 100. Okay, because that is like the evolution of it. He's like, I want it, I want it, I want it. You're like, I've changed my mind. Have you looked at this marketplace lately? Speaking of NVIDIA, okay, it's on a rip right now. Now, this thing, to be honest with you, hasn't bounced at all. Hasn't bounced at all. I'd expect a rip out of NVIDIA. So the question is, if NVIDIA rips, how can the NASDAQ possibly be down? Okay, well, let's take a look. Broadcom taking a pretty good hit, but Broadcom is kind of like a pimple, okay, on the back of NVIDIA. It's only, well, here, it's only what, $1.8 trillion, okay? By the way, I don't know how the hell it got there. I swear to you, it was 1.4 trillion like a week ago. Seriously? It was like 1.4 trillion, like over here. But don't worry, don't worry. It was a holiday week of trade, and now we're worth 1.8 trillion. What's 400 billion amongst friends? Okay, that's just, I mean, it's just a number. Okay, so I like that, Mark. I'll trade Nvidia at 140. I didn't ask if you traded at 140. I'd ask if you buy it at 140. I'll trade anything at any level. Would you buy it at 140? Like when I say a buyer, like, yeah, I'm gonna buy and hold it. Okay. Would you be a buyer at 140? What you have to understand is this, and what I'm trying to here, I'll just let you in a little secret. What I'm trying to rope you into, okay, is the exact same thing the market's trying to rope you in. You're committing in your head now at 176. Do you have any idea what the whole world and the market will look like if Nvidia hits 140? Do you? Okay, so I'm letting the cat out of the bag. It doesn't matter. Okay, I'll say it again and again. People still won't understand. The whole marketplace and the world is going to be feeling very different with Nvidia at 140. Okay, why? Because this is the marketplace right now. All right, and again, you need only go to the market cap, and it's $4.2 trillion company, and you got Microsoft pretty much neck and neck, and Apple's at $4 trillion. And as I was saying, Microsoft's at 3.6 trillion and Google is closing in on 4 trillion. Okay. But Nvidia, if it comes off, you got problems, really big problems, because there's only really two stocks. As I kind of developed this weekend, there's only two stocks really outperforming the S&P. Two stocks are responsible for all the gains in the marketplace. Okay. I know people are going to be like, no, it's Palantir. Okay. Alex Karp isn't going to save your beep any more than NVIDIA is right now. So if NVIDIA goes to 140, it's going to change the way you feel about this marketplace considerably. Speaking if it goes to 140, 140, okay, is somewhere right around here, okay? And when I put it to percentages right around here, that would make NVIDIA flat on the year. Let's say it got there before the end of the year. Yeah, how you feeling now about those S&Ps? You feel like crap. And you're probably not going to be, little froggy isn't coming out because it's just what's going to happen. It's again, you're a buyer now when the market's still cheery. You're not a buyer at 140. You'll see that kind of evolution happen in here. All right. All I'm trying to do is to keep people aware that markets, okay, are, and again, this is going to be the opinion piece. We've gone up for a lot of years. Okay, a lot of years. I agree to some extent with Garrett. Okay, Garrett is they're going to turn the money faucets on. They have to. Okay, they're going to drop the interest rates back to 1 or 2%. They're going to turn the money faucets on. Okay, but I believe it's actually going to be considerably too late, and I don't think it's necessarily going to help. And it could actually spike inflation again. There's serious issues. Okay. Regardless of what you might think about turning the money spigots back on, if it is too late, if it causes inflation, okay, the carry trade could get already screwed up. You could get problems in the S&Ps. Far be it for me to say this, but markets, they used to go up and down. I believe we're actually going to go into a cycle of heavy volatility for a long period of time, 18 months, maybe 2 years. I'm not saying that we won't necessarily hit new highs. I said that a moment ago. I'm not sure we might hit some new highs, but I think we're going to go into a period of heavy, and prolonged volatility, which is great for trade, terrible for investment. And if you look at investment, when I mean investors and traders, okay, look how many more participants are in the marketplace right now. You only have to go look at products like Hood, okay, Robinhood, okay. Can you believe? I mean, this thing's getting beaten up a little bit today, but can you believe that this piece of crap, okay, has gotten as far as it has? All you have to do is look at Robinhood stock. I'll make a really good argument with this one. Look at Robinhood stock, okay, and tell me there's not a bubble in the U.S. equity markets. Everybody, okay, you think about that for a second, and that bubble revolves around retail traders, because by the way, we were long this all the way back at like $8 and $10, dollars. We were long. I bailed. Okay, I bailed at like 18. I doubled my money. Okay, I could have been somebody at 123. I never would have held it to 123. I don't mind saying that either. People are like, oh man, I could have, I should have. I know I wouldn't. So whatever. Okay. Anyway, we owned like Robinhood back here. Nobody saw this. Okay. And what this is, it's retail order flow. Okay. And retail right now is you. Okay. And I think they're running out of gas in a big way. Okay. Then come back, they'll fight back a little bit, but they're running out of gas in a big way. It's a retail bubble. And you start to go back and it's not too far. I mean, this was a $20 stock, you know, a little over a year ago. $20 stock. Okay. It's now $120 stock. That's wild. And I think that this epitomizes the what's going on in the retail world. And it's, as I said to you, it's not going to go in the off into the night quietly. This is maybe a little violence out there. Double top. Okay. Maybe double head and shoulders. This is a two-headed beast. There's a shoulder here, maybe another shoulder here. Huh? The Medusa. Okay. It's a Medusa. Huh? Yeah. The golden arches. Could be the golden arches. You know, I don't like that pattern recognition crap, right? Yeah. Just making sure. Just making sure. Somebody saying Andre was saying the inflation is out of control, serving sizes. Okay. Yeah, no, you know what though? So I'm not sure inflation is causing the serving sizes. I just think that US companies are just like, hey, people accept getting screwed now. They do. Okay. And by the way, if you don't accept getting screwed, who are you going to call? They don't even answer the phone anymore. I don't know if anybody else feels that way, but you can't even you can call your credit card company. Okay. There's really nobody there. They actually are intentionally putting idiots on the other end of the phone. Sorry, if you work for a credit card company, okay, and you're like an executive, just tell me the truth at this point. Every company in the US right now is actually putting, okay, idiots on the phone because they can't answer any questions because they're not giving you any refunds, and that's the way it's going to be. They give you smaller portion sizes. That's really what that is. I don't think it's inflation. Okay. I just think you're getting screwed by every company in every way, shape, or form. Have you dealt with any insurance companies lately? Have you? It's good. Yeah. I like what Eddie said. Yeah, miss a couple payments. Okay, then they'll call you. Nah, they're not even calling you. That's actually their collection company. I have I have a problem sometimes with that, with not paying my bills. And the reason is, okay, there's a few bills on the island that you can't do auto pay. Like literally, you can't do auto pay because they're so bad and they'll screw up. So sometimes they call me they'll literally call me on the island. It's small companies. They'll call you, be like, "Hey Don, you haven't paid your electric bill." I'm like, "Oh, okay, you got me on that one." It's still like a very old school on the island, whereas here in the U.S. they would just turn it off. Okay. All right. S&Ps have a little bit of a bid back under them. What the S&Ps are riding higher on is exclusively NVIDIA at this point. All right, let's dig down a little bit. We're 20 minutes into the trading session. Okay, we're going to dig down to a couple of positions that I'm going to kind of recap, and then we'll move forward from there. This volatility position, this is actually shadow clocks. It's up about 34%. Okay, this gets closed in the next probably 8 to 10 days. So the shadow clock lives. It lives in all of us. So that one gets closed relatively soon. It's down a couple of bucks today because the vol is picking up, but it's okay. Robinhood, we've got a bearish position in Hood. Let's actually cruise back over to Hood just to look at the options position I'm in here. Okay, this one's a little bit unique. I actually purchased a slightly out of the money spread, and I did so thinking that Robinhood would try to make another violent move to the downside. What I liked in Robinhood, this is kind of called, it's a huge fade, rip and bounce, people, rip and bounce. This is marquee bounce and fade trade. In fact, just drawing a stupid line on the screen doesn't, look at the expected moves over there. Look at this. Okay. So it's just, this is prime time. Doesn't mean the trade's going to make money, but you crack the expected move, you crack the expected move, you crack the expected move. 3 in a row. Okay. Boom, you rip. Okay. And you ripped like a 2 standard deviation move back to the upside. So now you normalize and then you go back in to another bout of selling. That's kind of what we hope for in this particular case. Question is, how big is the bout of selling going to be? Okay. Well, guess you're finding out a little bit today. It's already down 3.5%, but that's not that big for Robinhood. Like Robinhood could move 8 to 10% in a day. Don't believe me? Just look back. It moved 8 to 10%. Okay, it moved like 15% Look at these moves. It's just violence, and I like it. So I took an out of the money position, looking for trying to hit a home run. I'm back to flat because I wasn't in timing of this thing. It's 11:26. So my timing of this one, okay, was right in this neighborhood here, but it continued to appreciate even beyond our wildest expectations in there. So Robinhood were fine in there. 16 days left, 18 days left for this thing to pull back. Starbucks, okay, let's go to Starbucks. Starbucks. I'm really surprised that this one has actually done so well. Starbucks being that Starbucks is right on the dance floor. There's almost a $4 expected move. We're trading 85 and change. When I say that we're on the dance floor, like this trade is completely viable. What I'm surprised by is how resilient Starbucks has actually been. Okay. And I've said this time and again, but Starbucks is just kind of channeling back and forth. All I was looking for is to go back down to about 80. I don't even need 80. Like I'll take 82. 82 and I'm fully profitable on the trade. But I am. I'm surprised in this one. The fact of the matter is it's been resilient, and you know people are starting to strike. There's a lot of problems. If you've not heard this, Brian Nickel, the CEO, okay, his salary. There's a lot of people picking on him for the amount of money that he's making. His salary is absolutely, unequivocally, egregiously large. I don't usually say that. I think that everybody that gets paid this much is usually worth it. So this guy took us, since his tenure. I don't know if he's worth it. Like I'm just going to throw out here right now. Okay, this I believe right there, that gap. I think that's actually where they hired Brian Nickel. For those of you that have no idea who he is, I call him Burrito Brian. He came from Taco Bell. Okay, the big cat meat scandal. There was rumors that Taco Bell was feeding us, grade C cat meat or whatever it was. They weren't really feeding anybody cat. They just like to, put it out there. Okay. I always wonder what was in those tacos. They do taste good. If they taste good and it's cat, I'm okay with it. I'm sorry. The cat lovers over here are mortified. Okay. It's okay if they taste good, right? Yeah. Okay. Yeah. I'm pretty sure cats don't taste good. Anyway, onward. So there was a scandal in Taco Bell, and he brought them back, and then he became Guacamole Brian. So it was Burrito Brian, which was Taco Bell. Then he became Guacamole Brian, which was an upgrade because he went to Chipotle, because Chipotle apparently had some very dirty restaurants. Now that I did see, a mice running around. To be fair, it was an open air restaurant in California. Of course, there's going to be mice in there. Okay. Anyway, some mice running around Chipotle. He saves Chipotle. And then he got pulled from Chipotle to Starbucks, and they offered him an egregious amount of money. And and he didn't even have to leave his Newport Beach home. They actually gave him an office in Newport Beach. A lot of people don't look at the details. Okay. This guy was like so cocky after saving Taco Bell. He saved Chipotle. He's like, look, I'm basically going to work from home. I'm going to work out of Newport Beach. You're going to get me an office, which they did. You're going to give me a ton of money, which they did. And what do you got? You got, Guacamole Brian, who's choking on a Starbucks right now. Basically, since his tenure started, stock just hasn't moved. I mean, it got it back to 117 because there was restructuring plans. Stock's completely kind of stalled out. Again, I like to tell the story, but the truth is I just need the damn thing back down to 80, 81, 82. I'll take anything. I'll take anything. But at this point, at least it's getting some sell side activity today. There's also a strike going on at Starbucks, but the strike, they make it sound like the strike is really big. It's not. I believe it's less than 2,000 baristas. Okay. There's like 2,000 Starbucks like down the street from me. Like literally, like right down the street, there's probably over 2,000 Starbucks. Yeah, I'm being facetious, but while in the bathroom of a Starbucks, they serve Starbucks in the bathroom of the Starbucks because in the other corner of the parking lot, there's a store with a Starbucks in it, and I'm going to a Starbucks. And then across the street, there's another Starbucks. There literally is. Okay, right in this area here too. It's kind of weird. And by the way, I don't drink this crap anymore. The only one that actually drinks Starbucks in our household now would be my 15-year-old daughter. Would drink some of that crap. They don't drink like coffee though. They drink like pink drink. The hell is that? Okay, that's 500 calories you didn't need. No, we give my kid a lot of crap. She maybe gets Starbucks every other week or something, but it's all kids in there now, which that's yeah. Okay, that's fat and lazy. Okay. Well, are we talking about America's youth now, or are we talking about Burrito Brian? I'm kind of confused on that front. So S&Ps kind of continue to garner some strength. By the way, the S&Ps are literally trading like lockstep right now with Nvidia. The advanced decline line has improved to 50-50. Don't get ahead of yourself. You've actually seen the financials rip since the cash open. Um, the volatility is coming off to some extent, but not enough. We might still pull back a little bit on this trading session. So it's shaping up, but there's still a lot of pressure into big technology, including like Google. All right, so we got through Starbucks. Starbucks is down like 30%, but to me, with an in-out spread, and this is an in-out spread, 30% is just, right on par. Okay, let's come into XHB. Let's cruise over to XHB because XHB, okay, has moved a lot further. Now in XHB, I did the trade further out, so I got 18 days left. But XHB, okay, now we need a real move here. Now we need a real move. XHB absolutely exploded to the upside. Look at these moves as they correspond to expected move. So you have a move that, you're breaching the lower edges of expected move here. Absolutely tears back to flat 2 weeks ago, breaches expected move to the upside. I mean, there's magnificently large moves. I am utterly shocked that it's only down 3 cents, given the fact that the bonds are getting hammered today. I am. I would anticipate today that XHB should see some more sell side activity and head back to lows. Okay. I mean, literally head back to like 107 ish. What are our strikes in here? Well, apparently I have to open up more strikes. More strikes. Here we are. Okay. The 105, 103. So pretty easy question. Can you get back down? Okay. To this neighborhood, the 105, 103. Can you get back down to this neighborhood? Well, of course you can, because we were only there like 3-4 days ago, to get back down to 103. Expected move in here is still $6. Okay. We're still very much on the dance floor. I don't like the XHB position because obviously it's moved against me, but we're still very much on the dance floor. And XHB, okay, has had just a wild amount of volatility. Right, I know this is Santa's rally. It's Santa's rally, okay? Because the S&Ps are down 19, but I have no illusions. I'm looking at the S&Ps down 19, 20, okay, and I have no illusions whatsoever. You're going to see volatility this week. The market pretty much is throwing off that signal as big as it possibly can. Okay, back over to my monitor tab. So we've gone through Hood and Starbucks and XHB. Okay. Here's one little off the cuff trade that I did. This is one that I only did in chat. Okay. I did not do this trade and send it out. I only did it if you were live in here. For those of you that are actually tuning in live right now, look, sometimes I only feed you if you show up. And what I'm feeding you, okay, are trades that are predominantly a little shorter duration, but they're going to be spreads and they're probably out of the money spreads. So sometimes I like to do trades, okay, that don't fit the mold of an in-out spread. Sometimes I like to do trades that don't fit the general mode of even the mold of an out of the money spread. So when I mix it up a little bit, I don't always send those out, which I'm okay with. Anyway, this trade is right where you want it inside of Google. All I was looking for, okay, was a rotation. The rotation was actually going to be, people were going to come in and buy NVIDIA, and then they were going to sell Google. Now, if you recall, what did I do? I did one position, okay, I did one bullish position in NVIDIA. The bullish position in NVIDIA worked beautifully. I was out by 1126. Okay, when was 1126? Okay, so here it is. Okay, I was out by 1126 because we caught the bullish move in NVIDIA somewhere down here. Okay, we caught it to the upside. We were out. We expected a significant bounce. And this trade in NVIDIA, the trade I did in NVIDIA, okay, people were like, oh, he caught lows. I didn't intentionally catch lows. We hit the lower edge of an expected move. and we were almost down here. We're down here. It's like, it was almost 3 weeks in a row, almost 4 weeks in a row of hitting the lower edge of expected move. Even if I didn't catch a low here, I was pretty sure we're going to bounce. I have to tell you, the bounce in NVIDIA that we went through, okay, is so meager. It's like wildly light. By the way, again, no illusions whatsoever. I think the S&Ps are still going to sell back off today. So I keep reiterating that because I know people are watching the market rally back up. Like, he's missing it. I ain't missing a damn thing. Okay, I'm watching it, and I think that's definitely going to roll back over. There's a lot of pressure coming in here. So the bounce in NVIDIA has been really meager. I would have expected, especially last week, more of a bid under NVIDIA. Like, I actually thought NVIDIA can get all the way back to 190. Okay, where is it right now? It's nowhere. Okay, I am pointing out a product that I'm not bullish in right now. Like, I mean, I'm actually shocked that it didn't rally. I was waiting for NVIDIA to rally so I could fade it. Okay, I do that. Sometimes I'll trade them bullish, but I would rather trade it, okay, from the other side. I'd rather let it rally and be like, yeah, it's the rip your face off rally. I like rip your face off rallies. Rip your face off rallies, okay? I think that that's what we just saw in the S&Ps. Rip your face off rally, and then you basically, go back into the pit of hell to which you came from. But I was bullish in NVIDIA, and then I threw on a bearish trade in Google, and I did them the same day. Okay, the bearish trade in Google was done the exact same day, and Google, okay, did also what I didn't think it would do. Google just kept going up. Okay, Google don't give a damn. Google don't give a damn. Okay, Google should give a damn. So Google is the most overbought thing on the entire screen. But I know, because everybody's like, I've said this, how could you trade against Warren Buffett? Okay, I'm going to go nice because he's 95 years old. Okay, probably doesn't even know where he is anymore. It's okay. He's actually pretty with it for a 95-year-old. Is he older than that now? 95. Anyway, he's retiring. He's done. What is that man going to do in retirement? Can you imagine having the exact same schedule for like 60, 70 years? Okay. I mean, he's a creature of habit. 60, 70 years, he's not going to show up to work. I don't believe it. He's still going to show up to work. Okay. Pushing people out of the way, checking their computer monitors and so forth. He's not going anywhere. Google, though, okay. Google, do not for 1 second think that this is the odd stock out. This is where the bubble, okay, is now. So this is not, and again, literally, Kristen just said Google's a honey badger. Okay, no, it's not. Okay, this is the bubble badger right now, and I don't even know what the hell that is. Okay, but I can tell you one thing: it's ugly. I'll have ChatGPT make us a bubble badger later. Okay, it's a honey badger with just filled with bubbles. This is the epitome of it right now because it's up 67%. And you're not giving enough respect to market capitalization of now what is almost $4 trillion. I say you're not giving enough respect because even NVIDIA, which is the outperformer, it's not outperforming it that much anymore. It's only up 29% now on a year-to-date basis. As I keep reiterating, Apple is not there. Okay, Amazon's a pile of crap. Microsoft up 16%. Okay, Microsoft now is in line with the S&Ps. Meta, okay, pile of crap. NVIDIA, we just went through that. It's up 29%. Tesla, pile of crap. Underperforming S&Ps. Broadcom, no one gives a damn because it's not big enough anyway. But apparently it is $1.8 trillion. I'll give one to Broadcom. Okay, but what I'm basically saying in here is Google is your performance. Okay, Google's your performance right now. And when you think it's unique, this is not unique. When you're talking about a stock that's like the true honey badger, a honey badger stock, okay, is one that goes up when the market's going down. It's one that goes, up when the market's absolutely tanking over here. And you might feel that, okay, but it didn't in the last couple of trading sessions. It did stall out. What you actually saw was just this huge rotation. Okay, this looks like to me, if my best guess, money, okay, is just running scared. They don't know what the hell to do right now. So they're just tucking capital anywhere they possibly can, okay, for returns. And that happens to be Google right now. You just go with the hot hand. That's pretty much what CTAs do. Okay, that CTA is, computerized trading. They're just like, what? They're buying? I'll buy it too. What? They're selling? Oh, we should get on that. Anyway, onward and upward. This stock is going to be interesting to watch. So I'm on the dance floor in Google as it slightly is descending over here, but there's so much volatility in Google right now at 36%. That's a lot of volatility for Google historically. There's so much volatility in here that I'm going to need a little bit of time to go by for me to actually make some money on this thing. So the spread right now in Google is it's up like 25%. Give it a little time. Like if we sell off a bit more today, I could close the Google trade. I honestly, I'd like to achieve better than 25 or 30%. Okay. I put the spread on. It's kind of off the cuff. I'm not taking it off yet. Okay. I like it. Okay. What else do I have on? Nothing. Okay. By the way, I threw the Google under like there. Okay. I got nothing else on. Nothing. Okay. What am I looking at? Everything. Shopping around. I mean, you realize that people were buying Boeing this morning because Airbus had to do a software update. At least they're not crashing planes. Okay. The software update took 2 hours in the Airbus. Like literally they were buying Boeing based on bad news that came out of Airbus over the weekend. Okay. The real bad news were the storms. Anybody here get the flight delayed? Okay. It was a mess this weekend. I have to fly later in the week. Yeah. I got to fly later in the week. I'm really not looking forward to it. Okay. Let's just say that flying is not what it used to be. Okay. Actually, flying is the same. The people are not what they used to be. It's just, okay. My own personal hell is the Miami International Airport. Okay. Oh, it's a beautiful airport, minus the people. Okay. Minus the people in there. It's yucky. I'm a disease freak. Stay away. I'm a germaphobe. Stay away. Miami is not the place for me. Time of the year where flu is rampant out there too. Okay. I'm not crazy enough though that I'm gonna be like walking around with a gas mask. I'm out of that. Okay. I'd rather get sick. So I at least draw a line. Draw a line over there. I'm germaphobe. Okay. So somebody's bringing up Netflix. Sure, happy to bring up Netflix. Okay, Netflix is obviously split. It's 10-for-1 split. It's got a bid back under it. Okay, I'll continue to kind of look at this, but I don't like it where it's presently trading. Channeling back and forth, it's definitely heading lower. I need a bid under it, at least to the upper edge of the expected move to kind of quantify that this would be a bounce and fade trade. So it's funny because I was actually shopping a little of that. I did look at Tesla a bit. Okay. Tesla is also, it's a pretty good candidate for what we term these bounce and fade trades, hitting lower edge of expected move, hitting lower edge of expected move, hitting it, bounced a little bit over here. Okay. This one actually breached expected move down here, hit the lower edge, bounced. Okay. Not half bad. Like Tesla should come back off in the days to come. The problem that I have with Tesla, and it is a problem, for in-out spreads, the volatility is sky high. When you start to get to 50% implied volatility, like in-out spreads, you got to do them really short term. You got to do like 18-day kind of vol, like because the vol is high. You're like, well, what's the high volatility have to do with the spread? It keeps extrinsic value. Like if I were to do, I'm not doing this trade, but if I were to do this trade, there's like $17 of time value packed into the short option. And you're basically like the trade won't widen, the spread value won't widen much, okay, in doing it. So that's one thing, like it's kind of outside the scope of the in-out spread class. Like in the in-out spread class, I don't talk too much about like, ooh, the short leg and the extrinsic value, okay? But the higher the volatility, it can kind of complicate things a little bit for in-out spreads. Tesla's not a bad candidate, okay? But you've got to shallow the time frame. You don't want to go out 39 days because 39 days out, these options are juiced. I mean, really juiced, 55 vol, right? So you got to go shorter duration. Like you could even do like 11 days. But when you do a trade for 11 days, you're like, holy crap, you just better be, sure that that stock's going to go down in 11 days. But, higher volatility moves around more. So, what's the difference between 11 days of a 50 vol stock or 22 days of a, 25 vol stock? About the same in terms of price action. Okay. All right. Yeah, a couple people, by the way, I do want to make mention. A couple people were having problems processing their 799 orders, and we'll talk a little bit about that too. All right, actually, let's get into other topics of conversation over here. I'm going to shop for trades all week long. I'll be putting trades on throughout the course of this week because it's a regular normal week. Next week is there's nothing normal next week. We have Fed next week, but let's start with expected move. The expected move this week is about $99. Okay, let's just call it $100. So the expected move is about $100. And I took the expected move. Okay, and I want to be very clear about this. Friday was a half a trading session. Okay, Friday was a half a trading session. And when it's a half trading session, you have to wait to 15 minutes after the half a day close and take the expected move then. Okay, some people are going to have the wrong expected move. Some people are going to have an expected move of $94. It's not right. The real expected move, because I took it exactly. I took a screenshot exactly 15 minutes after the close on Friday. The expected move is definitively $99.59. Okay, so the expected move in here, okay, is $99. So great. Let's just round it. Let's just put it at 100. So your expected move is $100 this week. Da-da-da. Okay, so it's plus or minus $100. What's wild about that is that this, okay, is a 5-day trading week. This was 3.5 days and had basically $145 expected move. So you had $145 expected move. You moved 250 points. Last week, we moved 250 points, okay? This week, we dropped to a $100 expected move. The reason I'm bringing this up, okay, is I want you to see that volatility is very, very funky, very, very funky right now. It's like your risk, okay, is very prevalent. It's big, okay? You can see how significant this move was. We moved last week from 6,600 to literally, okay, 60. I mean, it's as clear and clean as can be. You moved up 250 points. You never dropped, even for 5 minutes last week in 3.5 days. Now, okay, now you're on this $100 expected move. Like, how the hell are we a $100 expected move after you just had a 250 point move? That's exactly what I'm talking about with the vol crush. I would clearly and decisively take the over here, meaning that I think we're going to move outside the bands of expected this week. Okay, there's violence in this marketplace. Violence by the means of 250 point move to the upside. Your opening this morning, the low has been 30 points lower than we are. As I said to you, I assumed this thing was going to slip a little bit. But with a $100 expected move, to me, that's very meager, okay, this week. And moreover, and I do want to show you something interesting, okay, before I get into anything further. Economic data, I'll talk about crypto in a moment. Economic data is back, but non-farm payrolls is not till Tuesday, December 16th, okay? And it's weird, okay? Because December 16th, they're waiting like till after the Fed announcement. That's brilliant. It's just freaking brilliant out there. So the Fed is going to come forth and the Fed's going to cut, and they don't really have any information. And if you're not aware, okay, I'll bring up the calendar really quick. Next week, Wednesday, is an FOMC announcement. Why do they do it on December 10th? Okay, because apparently they have a nice long holiday. After December 10th, they sail off into the sunset. Jerome Powell, okay, his replacement has been chosen. We do not know who it is. I think it's probably the monkey that's the economic advisor to Trump right now. Let's put it this way. Does it matter? Does it matter who the Fed, chairperson is going to be? Absolutely not. And I'll make the argument why. It doesn't matter because they're cutting rates. And basically, the only question that they had when interviewing was, will you cut rates to next to nothing again? To go, absolutely, like, you're hired. Will you give me everything in the world for free? Absolutely, you're hired. Okay, so that's it is an appointed position. Okay, there's nothing wrong with that. I mean, but when you're being selected for the Fed, okay, one of the guidelines of the Fed was when they first established the Federal, Reserve, the FOMC, and the FOMC committee, it's in its charter, okay, it is to be an independent, okay, body. And although they're an appointed position, okay, this independent body was supposed to make decisions based on economic data. It'll be so interesting to see Like, again, the only question for that interview, okay, will you do exactly what I say? Yes. Yeah, like I love it. I absolutely love it. We're totally screwed monetarily, but it is what it is. Okay. Yes, I'm talking about Kevin Hassett. That's the economic advisor monkey. It's Kevin Hassett, or it's like, in my opinion, I've been rooting for Neil Kashkari for years because he's a patsy too. Okay. Neil Kashkari, okay, is actually dumb enough to have run, okay, on a Republican ticket in California. And that was after like the Arnold Schwarzenegger days. Okay. I know. Okay. So anybody that's willing to do that will do anything. Okay. He'll do anything for money. It's good stuff. It's good to know. Good to know. So yeah. By the way, I also believe Neil Kashkari will do anything because they stuck him in Minneapolis. If you were in Minneapolis, you would do anything too. Actually, one of the wealthiest people I've ever known, okay, lives actually in Minneapolis in Minnetonka. He lives there half the year and right down the street here half the year. But yeah, I would do anything to get out of Minneapolis in the winter too. It's good. So Neil Kashkari is still on the back burner there, but it's likely Kevin Hassett that will be the new Fed chairperson. Okay. Neil Kashkari. Okay. That's my horse. So the expected move is pretty meager this week. I think we're going to see some much bigger moves. We started this morning also in some heavier correlation. Now, let's cut to the chase. Let's actually talk a little bit about crypto. Okay. Crypto in the overnight trade can probably be pointed, like if you want to put a script to why the marketplace was selling off today, okay, I would say it's probably crypto. Literally, like, the market reopened and it was fine, and then crypto started selling off. Everybody's like, okay, that's it. Went like that, just like that. People kind of freaked. Crypto's getting killed. It's down almost 6%. I say crypto's getting killed. Crypto didn't really bounce much. I actually talked about it in the weekend update, and I said to you, unequivocally said, okay, I think it has to go a little higher, but okay, the resolve was 100% chance of it continuing its decline. Okay, and I left no room for error on the weekend update. I don't want to be misinterpreted on that one at all. Okay, I was talking about the crypto bounce. I expected the bounce to go a little further, but absolutely, okay, there's no question. It is going lower. I keep telling people that it's going lower. And you're like, well, why? Okay. It's a very different animal. And I'm going to use crypto. And I want to spend 5 minutes explaining this because I think it's such an important lesson. Okay. What is going on in crypto? Okay. What is going on in crypto? Sell side activity. The same sell side activity is prevalent in the S&Ps, but you don't see it coming through, do you? You see a marketplace at an all-time high. And then you switch back over to crypto and you're like, are you out of your mind, Don? Like, look, okay, yes, by the way, the answer is yes to that. But are you out of your mind? Crypto, okay, is down. Watch this. It's down, okay, 31% from some of the recent highs. You've lost 1/3 of your value if somebody bought up there, right? So, but I don't buy that crap. Let's just say this to here, okay, you're still down about 22%. So here's a very, very simple argument. Okay. And I've reiterated this time and again, and it just doesn't resonate. Crypto, you can short Bitcoin. You with me? You can short Bitcoin, but it's a pain in the ass to do. It's like almost impossible to really short Bitcoin. Now you can short the Bitcoin futures, which is tactically insane because if you short like a full Bitcoin future, okay, ain't nobody got margin for this. It's $180,000. I have freaking portfolio margin, which doesn't matter, but in a futures contract, if you short, okay, if you short this product, by the way, that's a buy, that's supposed to be a sell. If you short this product, okay, it's $180,000. Now there's also a micro contract, yada, yada, yada. They hold even more capital in some cases to short, okay, the Bitcoin future. So shorting in crypto, okay, is massive leverage. Very few people do it. And it's a heavily levered product already, and they hold huge amounts of margin. When you don't get, okay, shorts create rip your face off rally because shorts do what? They cover. So if you were short, You rode this thing from 100,000 down to basically 85. And then we bounce because what? You're covering your shorts. You know what covering shorts is? It's buying. Okay. In the end, in this marketplace, there's two things you can do in any marketplace. You could be a buyer or you can be a seller. Boil it down to the easiest, okay, of easy things to do. In this marketplace, you could be a buyer or a seller. And frankly, okay, crypto is a damaged product because it's such a pain in the ass to short it. It's going to be a damaged product. Nobody can short this product easily. Hey, but in the ETF, screw your ETFs. You can't do anything in the damn ETFs. They're terrible. This BITO is like the most liquid of it, okay? And it's always hard to borrow. It's always hard to borrow. Why? Because you'd have to be a nut to try to short it. It's impossible, okay? And I'm a nut, and I can't really short it. I mean, you can buy puts in there, but whatever, you get it. It's really hard to short. So you get very few shorts. And when you get very few shorts, all you have, okay, are actual dip buyers. The problem is no one buys a dip when you're demoralized. Okay, so now we're getting into the world of psychology in here, okay? Crypto is completely demoralized. There's nobody really left, okay? Especially all the kids that were flying high down in Miami, okay, driving Ferraris. Now what are they doing? Working at McDonald's again. Turns out that they absolutely had no skill set, and they're getting absolutely hammered because sometimes markets go higher and sometimes they go lower. Now, I think we're seeing the same price action right now in the S&Ps. I do. Why is the S&P not down 30% from its high? Because the S&P has shorts, because the S&Ps are going to rip on those up moves, okay? And it's the retail just comes in and buys calls and we rip. That's the component that's missing from crypto. So crypto, if you will, in my opinion right now, is a little bit ahead of the curve. It's actually showing its hand. This is really bad, though, for financial markets. One thing, though, that is surprising is when you look at individual stocks like coin, okay? Is coin down 30%? Okay, let's look. Is coin down 30%? Almost in line. Okay, so coin is getting beaten up a little bit, but coin is also, and by the way, coin, I'm talking about Coinbase. You can even see the bounces in coin are bigger. The bounces in coin are much bigger than they are in crypto. Want to know why? Because in coin, you can actually short this thing. So your best bet is if you wanted to short crypto, come into Coinbase. Come into Coinbase. Or what I did. What do you think the genesis of the Robinhood trade is? Okay, Robinhood is not completely dependent upon crypto, but okay, it's important. It's an important component. So what you have over here is a short position in Robinhood, really largely predicated on the idea that crypto was eventually going to get killed. So don't worry about BITO. Don't worry about any of that crap because they're crap products. I'm going to take the positions in Robinhood. I'm going to take the positions inside of coin. And I wanted to spend a moment on that. Okay, you better keep your head in the game though, because what's going on, and I really mean this, what's going on inside of crypto, not only does it bleed back, I was talking about bleed back to the S&Ps. I think this is ahead of the game. Okay, I think you're actually seeing a demoralized marketplace right now, but we keep bouncing. Why do we keep bouncing? Okay, because there's last gasps. People constantly and continuously will come back in, okay, trying to rally that marketplace to their last dollar. That's why I call it people getting roped in. Obviously, we have FOMC next week. Okay, we have, there was a little bit of an issue. Okay, we had enough people hitting the link of TheoTrade.com/799. Okay, if you need this, the link is in the chat room right now. But if you're having trouble with the link at all, okay, this literally is it. Today is it. Okay, when I say today is it, like last week was it? No, today really is it. Okay, this is it. TheoTrade.com/799. I didn't even put the hyperlink in there. Just copy my link, paste it in there. If you need help, okay, if you need help for this, just put a 1 into the chat room, okay? Matt will actually grab you. So, okay. Yeah, there's a bunch of people saying that they tried the link over the weekend. We were watching it all weekend long, and we couldn't reproduce the issue in there, okay? Our only assumption is you had enough people hitting the link that we're actually taking down portions of the site. For those of you that have no idea what I'm actually referencing right now, that's okay too. Let me actually show you really quick. And this is the last time that I will bring this up. Okay, literally, this is the last time I will bring this up. Black Friday. Black Friday is over. This is Cyber Monday. Okay, 24 shot. Okay, 24 shot. $7.99. Okay, and you get $7.99 back in Theo credit. There's no risk in there. There's no anything. Okay, yes, I want total credit. So all you have to do, okay, is go to the following link. Ladies and gentlemen, go to the following link. Okay. There you go. Um, so Peter was like, this is the Black Friday deal. Yeah, and you'll know Peter's been around a while. Okay. This is a better Black Friday deal by far than we've ever done. And I really do mean that because I didn't want to do the $7.99 anymore. Like we've done it enough years, yada, yada, yada. We've been doing this probably like the Black Friday special for I don't know, like 6 years or so, 6 or 7 years right now. Okay. Oh, you can't say 6, 7 in my house. Sorry. Okay. You say 6, 7 in my house. I have kids. They go completely nuts. Okay. They're all totally mental. You know that, right? If you guys have no idea what we're talking about, please keep it that way. Okay. Don't tell them. Anyway, it's been probably 6 or 7 years since we've been doing this, and I didn't want to do it the same way, but I wanted to do one final kind of blowout around like Black Friday. And in the past we've come up with some good stuff. This actually wasn't my idea; it was actually my partner's idea, and I'm like, that is just crazy enough. I like it. So it's $7.99. You pay $799. You get access to the chat room. You get access to 3 trades a week. Okay. You get access to all the archives. And then we're going to give you the $7.99 back in a credit. And you can just use it on another product. So if you know that you're going to spend like $2,000 next year, okay, buy 2 of them, buy 3 of them. It's fine. Okay. And they'll just bank them. And they're banked for as long as you want. Okay. We're not going anywhere. The hell am I going to do? I'm not going anywhere. What am I going to do? Okay. I'm not going anywhere. Anyway, it's TheoTrade.com/799. And today is the last chance in here. Speaking of last chance, I got to bring on Jeff Bierman here momentarily. Okay. Yeah, by the way, I am kind of sentenced to life. So sentenced to life. What are you in for? Okay. Trading. The thing is, like, and I really do mean this, like, what else am I going to do? I would sit here and talk to the screen, regardless if you're listening or not. I mean, there are mornings, a little bit of a grind. Okay. I got to travel later this week. Traveling has nothing to do with business. Okay. I got a buddy that's got his 50th birthday party up in Vegas this weekend. So I have to go to Vegas, which I don't like Vegas that much. I might see Rago. Maybe I'll see Tony. I might like Tony. Okay. But I got to go up to Vegas for 24 hours and then I'm going to go fly to the island. My wife is thrilled with me. I'm going to leave her. Okay. For a good, 10 days with 3 lunatics. By the way, when the kids start hitting their teenage years, okay, it's it's lunacy in this house. Like my own parents were actually staying here this weekend, okay, and I think my dad's parting words were like, "Sucks for you. See you in about a month or 2." Dealing with that, it's good stuff, All right, Jeff Bierman, how you doing? Do you have a teenager, right? She's 13.
Oh yeah, 13 going on 50.
Yeah, it's the crap that comes out of their mouth. It's pretty incredible. Pretty incredible. Yeah, I still have one that's not a teenager. He's 11, but it's the youngest, so he's a copy of a copy. He ain't all there. It's Don 2.0. I'm going to unleash hell upon the world. I apologize now for what my youngest son is likely to do in the next few years. Actually, though, my youngest is probably the child that is most likely to work with me down the line. He's a beast. He's a beast for sure. And I was going to put $2,000 in a trading account and let an 11-year-old go at it. Okay. But he's a clicking fool. I'm not sure exactly what would come out of that, but I'm thinking about it still. That's an experiment that might happen this next year. Jeff, what are you looking at this morning?
More of the same crap, which is it's performance chasing. They're buying the 52-week highs and praying. And I think, Don, we're at the tail end of this liquidity bubble that will probably end sometime in late December.
Yeah, I think that looking at Google today is pretty important. Google's down 1%, feels pretty heavy out there. Obviously, we're seeing a rotation into NVIDIA. So you're seeing selling across the board other than NVIDIA, which NVIDIA hasn't really bounced. Clearly, Broadcom's already taken a hit, but the S&Ps, okay, they recovered, as I said, no question. I thought they were going to roll back over. They rolled back over. Volatility, though, kind of coming back up. But the most interesting of them has been financials. We're back to lows inside of the financials here, too. So there's some pressure into this marketplace, largely masked by NVIDIA up 1%. Keep your head in the game today. Again, the advanced decline line has pulled back down. If it hits correlation, it's actually going to put more pressure into Nvidia, sell side pressure into Nvidia. But again, Google is kind of, I think, in the eye of the storm over here. It has not budged to the downside. And if that selling is going to actually bleed through, it's got to be Google. Like you have to see sell side activity in Google because Nvidia is basically positive on the day. So these two are largely offsetting one another. The market's being pulled down by the rest of tech. Jeff, it is yours for the next hour, sir. Have at it. I'm here the entire trading session. If S&P start getting a little freaky, they get freaky. I'm going to pop back in. Maybe I'll even pop back in with Brandon, or I should say Blake and Garrett, maybe later in the day. So stay tuned. I'll let you guys know if I do any trades. If I do trade today, I'm either getting out of Google, which is not happening yet because I'm only up like 25%, or I would be firing a trade out via text message. Stay tuned on that front. Jeff, all yours.
All right, so let me kick this off by saying good morning and welcome